Artificial intelligence is one of the most powerful tools ever created, and it may very well reshape the world in ways we can't yet imagine. But whenever I see something this exciting, this talked about, and this universally praised, I remind myself of an old rule. The more people believe a new technology can't fail, the more dangerous it becomes for investors. And right now, what I see around AI reminds me of the late 1990s, when every company with a website suddenly became a tech innovator. People convinced themselves that profits didn't matter, valuations didn't matter, and that the rules of business had somehow changed forever. They hadn't, they never do. And that's the part nobody wants to hear today. AI has created a tremendous amount of genuine value already. It's helping doctors diagnose disease, helping companies automate complex work, and helping entrepreneurs build things at speeds that were unthinkable just a few years ago. But just because something is useful doesn't mean every company in the space will survive. When the automobile was invented, hundreds of car companies came and went. The airplane industry went bankrupt more times than you can count. The internet made trillions for humanity, yet the majority of hot internet stocks in the year 2000 disappeared entirely. Great technology does not equal great investment, and that distinction is what many people today are ignoring. What concerns me most isn't AI itself, it's the psychology surrounding it. You see people pouring money into anything with the letters AI in the name. You see companies with no earnings, no business model, and sometimes not even a real product being valued, like the next world changing titan. You see investors acting less like investors and more like gamblers. And when I see that kind of enthusiasm, I don't get excited. I get cautious, because markets are not driven by technology. They're driven by human behavior, and human behavior doesn't change. We've had booms and busts for centuries, and the pattern is always the same. People get overly confident. They underestimate risk, and they forget that future profits, not dreams, determine long-term value. One of the most common mistakes I see right now is people assuming AI companies will grow at impossible rates forever. That's not how capitalism works. When a business becomes extremely profitable, competitors appear, margins shrink, costs rise, governments regulate, and expectations eventually exceed reality. I've spent more than 7 decades watching this play out again and again, and I've learned that the fastest way to lose money is to pay extraordinary prices for ordinary businesses. And many AI stocks today, despite their brilliance, are simply priced far beyond what any rational set of future earnings can justify. Another problem is that people believe AI will eliminate risk, but risk can't be eliminated. It can only be transferred, usually to the person who believes he doesn't have any. We saw the same mindset with cryptocurrency. We saw it with dot-com stocks. We saw it with housing in 2007. Every bubble starts with a truth, but every bubble ends with people ignoring all truths except the one that fits their optimism. Right now, the truth people are ignoring is that every revolution in technology eventually slows down. And when it does, only a handful of companies survive while the rest fall back to earth. I'm not saying AI will collapse. I'm saying the expectations around AI are unsustainable. When a company is trading at prices that assume perfection for the next 10 or 20 years, the smallest disappointment becomes a disaster. If the company beats expectations by 99% instead of 100%, the stock can crash. And the higher the valuation, the harder the fall. I've lived through enough cycles to know that a wonderful business can be a terrible investment if you pay too much for it. Investors today should remember that lesson. Another danger is that people are confusing productivity gains with investment gains. AI will make many industries more efficient, But that doesn't mean the companies selling AI tools will capture all the value. When electricity became widespread, almost every industry improved, but the vast majority of electric companies went bankrupt. When computers entered offices, productivity exploded, but most computer manufacturers didn't survive. Users of a technology often benefit more than the creators of it. That's what many investors today seem to be forgetting. And then there's the simple fact that the world is unpredictable. Nobody knows how governments will regulate AI. Nobody knows how lawsuits, privacy laws, national security concerns, or political pressures will shape the industry. Nobody knows how much energy future AI models will require, how supply chains will adapt, or when the market will become saturated. We're in the early chapters of a very long story, but investors are behaving like they've already read the ending. Does this mean you should avoid AI entirely? Of course not. It means you should invest the way you would cross a river in the dark, slowly, carefully, feeling the stones beneath your feet. The winners in AI will be extraordinary, but there won't be many. Most of today's companies will not exist 10 years from now. Most of today's valuations will not hold. And most of today's predictions about AI revolutionizing everything overnight will prove overly optimistic. The world changes slower than people expect. And markets are always ahead of reality, sometimes by a few years, sometimes by a full decade. If you want to survive what's coming, focus on the fundamentals. Look for companies with real cash flow, real customers, and real moats. Look for management teams that understand capital allocation, not just marketing. And most importantly, avoid the temptation to chase what's popular. Popularity is a poor investment strategy. It feels good in the moment, but it rarely ends well. I've made almost all of my money by ignoring the crowd, not by following it. In the long run, the best opportunities in AI will come after the bubble deflates. That's when prices normalize, emotions cool down, and the market stops rewarding hype. I can't tell you when that moment will arrive, but I can tell you it always does. And when it happens, those who kept their heads while everyone else lost theirs will have the chance to buy remarkable businesses at reasonable prices. That's what happened after the dot-com crash. That's what happened after 2008. And that's what will happen again with AI. So my message is simple. Don't let excitement blind you. AI is real. AI is powerful. AI will change the world. But none of those truths protect investors from the laws of economics. Those laws are older than I am, and they'll still be here long after AI becomes ordinary. Focus on value, be patient, and don't risk what you can't afford to lose. The world will keep innovating, but human nature will keep repeating the same mistakes. Your job is to avoid joining the crowd when it starts running toward the edge of a cliff. And in my experience, the crowd is already running awfully fast.